Today is Sunday, October 4th, and this is a market outlook for this upcoming week. I'll give you an update on the news that we have regarding the president's condition, and then we will debate two charts scenarios in the Qs, specifically the Nasdaq futures. We will look into the reverse head and shoulder, which is the bullish scenario, and then we will look at the reverse ABC pattern, which is the bearish scenario. We will discuss factors supporting the bullish scenario in this upcoming week. These are events such as the stimulus, and of course we will discuss factors that could weigh against the market here and support the bearish scenario. Finally, I will reveal my strategy for this week and how I plan to weather the storm, because we are in uncharted territory and uncertainty is running really high. I believe that the market has a very impulsive move under its sleeve. It could be going to the upside or the downside, so I have formulated a strategy to weather the storm either way. And here we go, the updates. The President of the United States, of course, released a video yesterday saying that he's okay and thanking his supporters, etc., etc. He, of course, looked a little roughed up from that video. However, important to note that his tone suggests that if he does recover, he will push even harder for the reopening story and for vaccines and treatments. Meaning, if you remember from the last video, we made a scenario analysis and I told you that the most likely outcome is that the president will recover and he will come out even more reckless than before, which will be very good for the reopening story and the reopening stocks. Now, here is what we know additionally. Here is a list of the people who tested positive for COVID-19 so far. And you can see very important names here, and the list will probably going to expand as the days progress. And here is a list of people who tested negative, at least for now. Of course, what we know here, and this is from the New York Times, that there was a super spreader event over last weekend and the infections started to take place during that event. So the people who tested negative, including Vice President Pence, are not out of the woods yet because he could test positive in the next upcoming days, further adding to the uncertainty. And of course, lots of conspiracy theories floating around, and finding solid information, reliable information is very, very difficult right now. Of course, the president's team are trying to portray a rosy picture, that the president's case is mild, he'll be out in no time. And of course, if you look at the other side of the aisle, if you hear from CNN or any news network, you would think, of course, that the president is already dead and the White House is trying to hide it. So we'll try to do something in the middle here. Of course, the Trump administration and his supporters released a series of pictures claiming that the president is all right, he's recovering, and he's even working on behalf of the people. And they released two pictures, one supposed to be taken in the morning and another one in the evening. However, when they released the pictures, they forgot to take out the timestamps from the camera. And what we found out, of course, that these two pictures were taken 10 minutes apart, aka staged. And of course, people pointed out that there is an error in reflection in the table and it looks Photoshop, etc., etc. Now, we are not going to take any of these things seriously. For all we know, the president is sick. He's in the hospital, and it looks that his case is still moderate for now, judging from his condition from the video he released. What happens after? We'll have to wait and see. This is the uncharted territory. And of course, let's move on to discuss the market and how that would go hand in hand with the news this week. Critical week, and it will be very difficult to navigate, and it will swing. Very volatile swings depending on the news flow. But let's review the technicals. First, the bull case. Here is a chart of the Nasdaq futures from a daily perspective. The argument for the bulls, regardless of the news, looking at the technicals individually. We have a potential of a reverse head and shoulder pattern. The reverse head and shoulder pattern is no magic or something you should take as if it was the gospel. There is a psychological explanation behind it. As the chart or the underlying stock sells off, it catches a first support. The first support fails. You catch another support a little lower, which is the head. The chart starts to rally and then again gives up. However, it catches support yet again from the same level it did the first time around, therefore creating a head and shoulder pattern. And psychologically speaking, it is just another pattern that shows that traders are stressing that this is a fair price to buy the underlying stock. Therefore, this pattern is considered to be bullish because it has a floor. There are traders large enough to see a value in buying the name at these levels. That's all there is. Now, how would you know if this pattern fails? Well, you do have something called the neckline, and that is around 10,925. If we fall below that, you know that the reverse head and shoulder pattern is scrambled eggs and it's off the table. So we'll watch out for that when the futures open. Now, here is the bearish case. It says, from a weekly perspective, a more significant chart than the daily. It says we are forming an ABC pattern, a sell-off, a rebound, combination of short covering and dip buying, and then resumption of the same primary pattern, formulating the C leg as shorts finish covering and dip buyers take their profits. So let's review which factors regarding the news flow will favor each case. Beginning, of course, with the bullish case. Number one, we do have Nancy. Nancy, as soon as she heard she's been playing tough against the Republicans, saying no deal whatsoever. All it took, of course, for the president to go to the hospital, and now Nancy's bending over backwards, trying to pass the stimulus and have a negotiation with the Republicans. Now, I'm not sure if Nancy's reaction was a knee-jerk reaction because she wanted to show that she's bipartisan and she's stepping up and not politicizing things, etc., etc. And now as the president gets better, perhaps she'll change her mind and say, hey, there is no stimulus until after the election. We'll see. But for now, Nancy indicated very strongly, even as today, she reiterated her commitment to passing some deal of a stimulus. So that would be a very positive factor for the bullish case. Passing the stimulus will generate a rally, no question whatsoever. Unless the stimulus is very weak, say it's just an airline carve out and that's it, then that would be a different story. The second factor that we do have supporting the bullish case is the devil, aka Masayoshi Son of SoftBank. The devil is at it again. Remember in August, he spent over $4 billion buying call options, and he, along with the Robin Hoodiots, his cadets, created a massive gamma squeeze in the market, causing a very impulsive sharp move to the upside, which was corrected with yet another sharp move to the downside. And we now know that the devil is trying to do it again, buying over $200 million worth of calls in Netflix, Amazon, Facebook, and Google. No Apple this time. Very interesting from the devil. But if he is successful, add to that, of course, if shorts attack the market and then they're forced to cover, that would initiate a massive rally to the upside on the table. And now the third factor, of course, the most important factor that would support the bullish case, the reverse head and shoulder, is if Trump gets better. And we do know that the doctors came out today and they said, hey, we could discharge the president as soon as tomorrow, meaning Monday, and he will continue the recovery in the White House, signaling that the worst is behind us. That is bullish news for the market. Now, let's discuss factors supporting the bearish case. The ABC pattern. Number one, of course, is the psychology of market participants. They've been very complacent as of late, but the news about the president's diagnosis shook them really hard, and perhaps lots of them over the weekend reflected that there is a massive amount of uncertainty and risk in this market, and you'll start to see panic selling taking place this week. That is on the table supporting the bearish case. Now, we do also have technicals supporting the bearish case. Number one, we do have negative MACDs from a weekly perspective across the indices. Furthermore, we do have an ABC pattern, a bearish one, in both the SPY and the Qs, yet we do have a bullish ABC pattern in the dollar index, further solidifying and supporting the bearish case. And the third factor, of course, perhaps the most important one that would support the bearish case, is if President Trump's health gets worse from here. Or, of course, if God forbid he dies and succumbs to the virus. Now, we do know that in 2 instances, he had to have oxygen provided to him, meaning there wasn't enough oxygen in his body. This happened twice, according to the reports from the media, meaning that he is not out of the woods yet. And even if he is discharged on Monday to the White House and say the stock market rallies, if we see him cough again, or if his oxygen levels drop again and he has to be wheeled back to the hospital, you bet that the market will crash again. And we will see this very impulsive movement up and down in the market. Very, very scary stuff. So it is important to listen to my strategy at the end of the video. And here is the fourth factor, and perhaps this is not a direct one and not immediate, but it will be impactful in the days to come. It is the China factor. Now that the president himself is infected and his wife is infected and his kid's probably going to be infected at some point, he will probably take this very personally with China and becomes even more of a hawk, China hawk. And that, of course, will generate lots of back and forth and threats between the US and China, which will impact at least the semiconductor sector in a negative way. So that will weigh in and support the bearish case. Now, here is my strategy. In essence, it is a straddle strategy, meaning that I don't know if the market is going to go up or down on Monday, or for the entirety of the week for that matter. So the strategy here, of course, is to buy calls and puts or long and short position in any vehicle you want, whether it's stocks or options, for the same strike price, meaning that you wouldn't care if the market goes up or down, in this case, the NASDAQ. So let's say that you buy the at-the-money call and then at-the-money put at the same time, creating what's called a straddle. In this mindset, of course, you're expecting an impulsive move either way. The worst case scenario for you is if the stock market stays flat to muted. You don't want that. You're betting on both sides, expecting a very impulsive move one way or the other, which will make one leg in your bet worth a lot more than your entry price. You end up booking profits. So here is what I did this week. And of course, I had to rush things on Friday, so the trade did not work exactly as I wanted in terms of the construction of the trade, because I wanted to do it all options. However, I ended up having half options, half stock. And here is what happened. On Thursday, I bought puts on the TQQQs, which is the Ultra Pro Leverage Index for the triple Qs, the NASDAQ. This is the bullish ETF for the Qs, the TQQQs. I bought puts, specifically the 125 expiring next week, or this upcoming week, I should say, and I bought about 62 G's worth of these puts. Now, at the same time, I made this into a calendar put. So I did sell the 125 put on the TQQQ, which expired on Friday. Now, a last minute decision, I decided to let about 60 G's worth of the puts I sold in terms of options to ride in the aftermarket. Remember, I sold the 125 puts in the TQQQs. The TQQQs closed above 125, meaning that the puts are not in the money, and thus I'm not going to be assigned yet. However, after hours, and this was the bet, that after hours, the TQQQs would dip below 125 and I will get assigned about 500 shares of the TQQQs at $125. So now I ended up owning about 62 G's worth of stock in the TQQQs, but I do have also about 62 G's worth of puts against the TQQQs. So to me, it doesn't matter if the Qs are going to gap up or down in the morning, because I do have bets on either side. It doesn't matter if they go up or they go down. However, right away on Monday, or perhaps as late as Tuesday morning, I will know what the market wants to do, and I will end up closing one of these two legs, either the bullish ones, selling my stocks, or the bearish one, which I have in form of puts against the TQQQs. The ideal scenario, of course, for me is if we gap higher in the morning on Monday and I end up closing the stock position, the bullish position, using some of the proceeds to buy more of the puts that I have, and then the market reverses and trends lower. That is the ideal scenario, but again, we're uncharted territory. I have absolutely no clue how the futures will open tomorrow and how the markets will trade tomorrow and for the remainder of the week for that matter. This is why I'm using a hybrid straddle strategy. So to me, it doesn't matter if the stock market goes up or down. And you can do that, of course, assuming the market opens flat on Monday, because as we said and discussed, the market movement will be very volatile, very fluid, depending on the news flow. Anyways, this is my strategy to weather the storm this week. And of course, you know at which technical levels the bullish case will be off the table and at which technical levels the bearish case would be at the table, because we've discussed this before in prior videos. With that knowledge, you will have a crystal clear directions on which leg of the straddle you're going to close first and settle with the other one for the rest of the week. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.